What's corporation tax and how does that differ from income tax? Well, if you're a sole trader or a partnership, you will be paying income tax on the profits of your business, okay? As a limited company, you actually are a completely separate legal entity. For example, a director of a limited company will be paid via PAYE in a lot of cases. So potentially a low salary and a high dividends policy, and that's ultimately how they extract the money from their business. But the business itself, as I say, is a separate legal entity. So when you've, done your annual trading, you've got your turnover less all the costs of your business, you will arrive at the profit, and then that profit is taxable at whatever the prevailing corporation tax rate is, and that obviously needs to be paid over to HMRC. Now clearly that's a tax on the business and is notified to HMRC using a form that's currently called a CT 600. As a director, you then have a separate process, which is a self-assessment tax return, which again a sole trader or partnership will complete. And in fact, a lot of business owners actually will complete those each year, and that will assess how much profit you have, what you've extracted from your business in terms of either drawings or salary. It will also obviously take into account any other income that you may have, so that may be income from bank interest, other income if you rent out a house or you have other employments or self-employments, and then any dividends that you have and various other payments like donations to charity, gift aid, etc., etc. So there is an awful lot of stuff that goes into the self-assessment tax return that gets produced currently. If you are submitting it yourself and you are asking HMRC to deal with that, then it needs to be submitted in October. If you are doing it electronically, then it's by the end of January. And so that's the difference between corporation tax and income tax.